Thanks, Chair. Thanks, Mr King and Ms McCann. I'm going to ask you the same question I opened up with CBA, just to get your version of the response. If I buy a $5 cup of coffee in cash, it costs me $5. And if I buy the same thing on my debit card, it costs me $5.08. It can cost up to that much. Why is that?
Because merchants or businesses are allowed to surcharge for electronic payments.
So you think it's just because of that?
It is.
That restriction?
Yeah.
Yeah.
So that's sort of the factual answer to your question. I think if we sort of come back to, is the policy working, is the other thing I think about. And what we're seeing is I don't think it's driving, the surcharging policy is not driving customer behaviour. What I think is driving customer behaviour is convenience, particularly digital wallets, and they choose between credit cards, debit cards, and FPOS. In your case, that's an F. What is that?
Yeah, it would be FPOS. Yeah, it's a multi-network card. So I've got FPOS
debit or
and
credit?
Debit.
Yeah, it's debit. So 1.6
up to one. So if I go into a blended rate, I'll get to blended rates in a second.
You've got a blended rate there. So that's an example where the policy is probably not working.
Yep.
1.6%. In fact, that's higher than our blended rate that we would charge a merchant for all. And I think that comes back to the heart of it, that we really have to think about whether surcharging is worth it, because I'm not sure it's driving the policy intent. We know the Reserve Bank's looking at it. There's no other cost in a business that people get to surcharge, if you like. What we see in our terminals, for the ones that we can see, is 90% of, well, broadly 90% of people aren't surcharging, 10% are, but we don't see some of the big merchant customers that we bank because they have their own terminals. So it's a subset of the population. But I think the question is it driving what we thought it would? And I don't think it is. It is confusing consumers, I think. And not everyone is doing it, and there's differences between merchants about whether they have a specific charge for FPOS, debit and credit, and then those that average it. And that typically depends on what they're choosing with the bank. So we offer customers the opportunity, if you like, for all you can eat. Here's a rate for everything. Some like that because they like to manage their cash flows that way. Others like the direct charging of give me a charge for credit versus debit versus FPOS. And so we've got a market at the moment that's probably too complex for the consumer to make a decision. And then the other issue we've got is some merchants are charging fees well above their costs because there's no enforcement of the rules. So I think we can all sort of have an experience. It might be getting some transport and you get a 5% charge and you go, what's that? And the taxi driver says, well, that's the bank. Well, it's not actually. Someone's configured the merchant terminal to charge that rate.
Do you think that non-enforcement's pretty rife? I mean, I know that's a question.
I don't think there is.
Yeah.
It's pretty hard.
Yeah.
It's a distributed. How many business? We've got lots of businesses, lots of merchant terminals. It's pretty hard. I think when you're talking about 8 cents on that transaction, is it worth the confusion of what's going on? Probably not. It's another cost of business. All other costs are blended in the $5 price. So why should one particular payment mechanism be treated differently to others?
I think I'm not begrudging small businesses for having to pass on some of these costs. I just spoke to someone downstairs. Their annual cost of merchant facilities is like $12,000.
Yep.
That's a significant amount. I'm a bit worried about the blended rates, though, particularly when it comes to the use of FPOS debit. You mentioned you charged 1.2% as a blended rate. You just said then it didn't work. Where they use FPOS debit, there's a saving there that's not being realised either to the merchant or to the customer, is there? Because the cost of an FPOS debit surcharge is not 1.2%, is it?
No, it's lower.
Yeah,
but we're 100% enabled on least cost routing. We're take-ups in the low 40s. We probably think we get up to 60, feels about right. Big pardon?
Why is it so low, do you think?
Businesses don't tend to worry about their banking all the time. They come in to run their business. And so we've just got to continue to push them to choose the best option for them.
Do you think it's not high because businesses are just passing it on now because it's a lot easier through do your terminals enable
possibly, but if I look at that 90-10 split, that would, for the terminals we're seeing, maybe not. But I think that we're talking about, if you think the merchant terminal, we're talking about the cost to the customer that way, and then the cost from the bank. One of the things that the Reserve Bank has done a very good job on is bringing that sort of interchange rate down over time. And when I talk to the global schemes, they say they don't like Australia because it's been pushed down too low. So we are pushing it down. We can do other things, but you will have customers pick reward cards. And reward cards you think about a credit card, it's got rewards, it's got insurance, it's got interest-free periods. You also get access to a global network so you can use your card around the world. All those things have costs, fraud protections, of course. And so it's a fair question about what's the balance of that cost. I think the Reserve Bank does do a good job of bringing that into perspective, and they're effectively the independent arbiter on those scheme pieces.
Look, my question is specifically around EFTPOS debit, because we are unique in a way there where we do have this pretty robust domestic payment system. You're a co-owner of that, is that right?
Well, through the MPP.
Through the MPP, yeah. We've got the MPP, we've got EFTPOS, we've got PayID.
Yep.
And with respect to the global scheme providers, we're not big fans of them either. Well, I'm not big fans of them either. I don't want to, if they don't like Australia, then that's okay. There's this big differential between the rate that a large business would pay. I think the RBA has it as low as 0.2% for EFTPOS, right up until 1.8, 1.9 for EFTPOS debit. Do you think that's particular? How do you explain that? You've got different rates, obviously.
It's economies of scale. It's purchasing power. If you're a big supermarket chain, the value that often they have their own switches anyway, but the value that you're putting through justifies a lower price. Is the cost to you the same, or is your cost dependent on the transaction value? It'll depend on the relationship. But if I sort of come back to the base things, your point's right. There's a different cost to credit cards, to debit cards, to EFTPOS, but they do have different features. Is the only thing I would sort of highlight. And if you take credit cards, one of the things, why do I put on my spend through a credit card? Well, I have chargeback, fraud protections. I also have rewards, and I want to get the points. So there's a bit of what is the consumer selecting as well as the cost to the business, and that's a bit of a conundrum about who's got primacy of decision there.
Just some similar questions to the previous bank as well from earlier this morning. You seem to have an exclusive relationship with MasterCard as well. When I go to your new account screen and I go to open a new Westpac account, it automatically comes with a debit MasterCard. Is that right? Is there an arrangement between you and MasterCard to provide debit MasterCard?
Within the group, we've got a couple of brands.
Yep.
So we've got Westpac, St George, Bank of Melbourne, Bank SA. Yep. Typically Westpac's MasterCard, the other brands are Visa. Okay. Is how it works. So we actually have.
So we'll just ask for Westpac for this
with both of them.
Yeah, just for Westpac. So you have an arrangement with them.
Yep.
And how do they incentivise you to have MasterCard as sort of your provider for those type of products?
We went through a competitive process when we set up the arrangement. I can't remember how long ago, but it was probably 4 or 5, maybe longer, years ago, and that resulted in the best provider at that point in time for that length of contract.
So there's an exchange of money, or is it per you get a cost, you get a better percentage?
It's typically interchange. There's typically interchange, yep. And then there's typically a request. We can get some money back, but we have to invest it back in the business on certain certain initiatives that benefit that business.
So MasterCard gave you a better interchange fee than others, like without giving away your secrets, but that's how it would work. You would choose. Why did you choose MasterCard over others?
Well, it's not just cost. We're looking at service, the rewards proposition, the fraud proposition, the cost as well. How it integrates into our systems. Do we want to have customers change cards? So there's a whole heap of things that go into a decision about a relationship with any provider, including a cards provider.
And theirs was the better proposition at the time. At that time. How often do you review those?
I knew you were going to ask that. I think it's up in 2 or 3 years. It was quite a long contract.
Yeah. Okay. I want to understand why, with your LCR so low of the big four, the take up 41%. I think others ranges from 41 to 52%. So my understanding with LCR so low, if a consumer taps with a multi-network MasterCard debit and FPOS, if LCR is off, it goes through the MasterCard debit function.
I think that's right.
Yeah.
I think that's in the set for the wallet and the card.
Yeah.
Depends how the wallet and the card are working.
That's right. In most instances, what given that you co-own FPOS, and from my understanding, the costs to you through FPOS in terms of that interchange fee are lower. Correct me if I'm wrong. Why isn't LCR enabled for all your merchants, the ones that you have control over?
I think it's coming is the first thing. But if I look at FPOS at the moment, I don't think we've got a digital card for them. So we've got to we need equivalent service, one that goes in an Apple Wallet type thing.
No, you can.
Not everyone though.
Right. Well, the multi-network card that I've got, do yours do that?
Yeah.
So I can choose MasterCard or FPOS on my digital wallet.
Right.
Yeah.
MasterCard FPOS. Okay.
You don't offer that?
I'll have to check actually.
Yeah. Okay. All right. Again,
But I come back to one point on debit cards.
Sorry?
Debit cards are a global system.
Yep.
Yeah. And you get the protections, including fraud and whatnot, through MasterCard. FPOS, you're right, is cheaper, and it's domestic, and it's not global. So that's how we're thinking about it, and we'll look at the routing and how it works from an FPOS perspective.
Do you make more or less revenue and interchange from FPOS debit or MasterCard debit?
More. Do we make more money out of the different cards?
Yeah.
I don't think we make a lot of money out of cards in aggregate. Actually, if the cards business for us is not a great business.
That wasn't my question.
No,
Which one do you make more of?
But we don't look at interchange as a piece. We look at the business, the whole economics of the business, and it's not a great business to be in at the moment.
Providing cards?
Yeah.
Right. Does it cost you more per dollar to transact in cash or digitally?
Different per dollar.
I get they're different, but which ones?
96% of our transactions are digital. We couldn't handle that through a branch network anymore. It's just too much volume. So it's not it's not an interchangeable capability. There's too much volume that goes through now. The cash costs us about $350 million to handle, store, move, and whatnot, and it's embedded into the price of other products. It's not charged for as a distinct mechanism like digital payments.
And so back to you first, just to clarify, because this is what I'm trying to get down to, right? Like, why is it that for cash it's embedded? Is it a cultural thing? You mentioned regulation.
It's historical.
Is it simply just...
It's just historical.
And it's just this sort of...
You've never charged
digital,
for cash.
It's a new payment. It's never... Yeah. So do you think we should move to a stage where we don't charge for digital payments, or at least have one option that's fee-free?
A free digital payment?
Yeah.
No. I don't think you're going to have investment in the network, the security and everything that you need. I don't know who will invest in the network. I think generally what we're seeing in banking over the last 10 years is cross-subsidisations are unwinding as competition comes in and picks out particular parts of the value chain. So if you have anything that's not economic, it doesn't get invested in. And I'd be really cautious about saying you want to have free payments because it'll mean there's no price signal to invest. So I think it's the other way. We want each piece to be economic in its own right, which sends the right price signals to everyone in the market.
Do you see why consumers and businesses are really agitated about this?
Yeah, I get it.
We've all switched to, not all, 75% of Australians have switched to digital. They do so for various reasons. There is a broad understanding that the digital movement of money is significantly cheaper than the non-digital alternative, yet we're being charged for it. Is that...
It looks that way, but then if you're a business, you've got someone handling the cash, you've got the security around it, you've got all those things.
Sure.
We just don't cost that. But we don't cost that and compare it against the 12,000 of digital payments. So that's what have you got a person just handling cash versus what are the charges from the bank in a digital world? That's, if you're a business, the trade-off.
Okay, thanks.
Thank you.